China's Premier Li Qiang has sought to dispel concerns about China's economic growth and says the country is on track to meet its annual targets.
Li Qiang addressed international business leaders at the World Economic Forum in Tianjin, the so-called Summer Davos. It comes against a backdrop of disappointing economic data from China, as slowing trade and a struggling property sector take their toll.
Premier Li criticised so-called de-risking by the West, the push to break away from supply chains from China, and he called on the international community to cooperate more closely.
As you know, some in the West are hyping up the so-called cutting reliance and de-risking. These two concepts, to a certain extent, are a false proposition.
Let's talk to Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. Marc, welcome. Good to see you again. Well, 5% growth would be having the West opening the champagne, but China, of course, accustomed to double-digit growth. How do you assess this speech?
Well, I think there was an element of also, I think, of passing the blame partly for China's economic headwinds at the moment onto the West. There's no real doubt about that, but nevertheless there was an acknowledgement that more needs to be done. To be honest, achieving the 5% target that they've set, even when one considers that a number of large investment banks have been cutting their China growth forecasts, 5% is still actually below the majority of those forecasts. So it's not exactly ambitious. But I think what people want to see is exactly what sort of package is going to be delivered.
Decoupling and de-risking are the buzzwords of the moment. He spoke about this a lot on his recent trip to Europe. He didn't name any countries in particular. Who is he talking about?
Well, if one looks at the recent visits to China by French, European and German leaders, it's clearly more aimed at Ms. von der Leyen and Chancellor Scholz than it is at Mr. Macron, who was, well, to a certain extent, the message he delivered was slightly different to the one that was coming from both from the EU Commission and from Germany. So it is aimed at that, and it's above all aimed at the US. There's no question about that. Those tensions have long been there, and they long predate President Biden, as we all know. So, it is aimed at... there is an element, of course, where one has to make the observation. There are only certain areas in which the West can actually decouple from China, and critically, one of the areas which it won't be able to do so in a meaningful way is to do with the energy transition, because China actually provides so much in the way of the raw materials, the finished products that are necessary for energy transition around the world.
Li Qiang says growth will increase in the second half of the year. I mean, realistically, how realistic is that against this backdrop, as we've been reporting in China, of low investment, weak manufacturing figures and the property sector?
Well, the property sector is definitely going to be a critical part of it, and the measures, whatever measures are announced, will need to aim at the property sector to shore it up. Balance sheet resolution for the property sector developers is critical, but also delivering something which gives confidence. I don't think actually rate cuts are, yes, there's room to cut rates because inflation is super low in China, but I don't think that's really critical. It's to a certain extent, and actually might undermine consumer confidence. If one looks at the example of Europe, low rates basically encourage more saving, not less, as a general example, and that's been seen in a number of countries in the world. But what's needed is something which also opens up the private space. I think something which, after all the clampdowns that there have been, particularly on the tech sector, some of them very understandable, but on the other hand, we need to move to a much more friendly environment for the private sector to encourage that. Tax incentives, definitely, for things like the high-tech sectors, for biopharmaceuticals, would definitely be a good area to aim at, particularly as they are, big, they have a big market print in terms of big consumer take-up.
Can we talk about the investment climate in China? I mean, do you think, in short, this speech will help ease the concerns of multinationals in China?
Not specifically. I think really what's needed, people want to see what incentives are going to be offered. It's all very well to talk about things. It's now people want some details, and some details which actually feel like there is an incentive there, and it's a sufficient incentive to offset some of the measures which are being taken in the US and Europe and indeed the UK.
Mark, good to talk to you. Thanks very much indeed for coming on the programme again. Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International.